What's up, everybody? Today is June 25th. We took two trades together as a team, and we ended up getting stopped out on the first one. And the second trade was the trade that made the loss back and some. So, me personally, I took the first trade on my personal account. It was a 1 to 1.6 risk to reward. That one got stopped out, so I didn't trade any more on that account. This one, I traded it on an eval, and I ended up making the target profit for it to pass. So now I have another PA. So let's get into why we took longs this morning. So looking at the 4-hour chart on NQ, we see that price came back down this morning, came back down at the beginning of this week, so yesterday, into this 4-hour fair value gap. Here we were wondering whether price was going to bounce from that zone or if we were going to end up continuing down further to target, say, these relative equal lows right here. Taking a look at the 1-hour chart, we started to look for some PD arrays that would help us to validate the short bias that we wanted to see potentially. So we took a look at a 4-hour fair value gap that we had up here, or I believe this might have been a 15 fair value gap. But the one that we were eyeing the most this morning was this 1-hour fair value gap right here. This one was key because we ended up getting a low, a swing high, a swing low, and then we had displacement above this swing high. This was the fair value gap that created that displacement. And so we wanted to see that if we were going to get a 1-hour candle close below here, we are going to continue with a short bias, just due to the nature of the structure that we were having was very bearish. But this market structure shift was kind of giving us a little bit of a, we'll see what we're going to do. And so we did not get that. Obviously, we did not get that 1-hour close. Why did I want to see this get invalidated? Well, the way I look at it is if we have higher time frame fair value gaps being invalidated and not holding up price, then obviously the draw on liquidity would have been lower. And so if this one held up price, the draw on liquidity was going to be higher. And we see that is the case. We should probably be targeting these relative equal highs right here for London session tonight, if not tomorrow AM session. But so we kept an eye on this. The reason why we wanted to have a short bias initially too was if you take a look at the quarterly theory cycles, you'll see that overnight we accumulated and we ended up taking out the Asia high first. Now, the way I usually look at it is whatever it took out first is the one that will give us a distribution move for the PM session. Clearly, we did not get that. We took out the high, we dropped, and we took out the low. So we took out both the high and the low. When that happens, I tend to kind of drop the narrative of quarterly theory since, it gives us mixed signals here with this because we ended up getting displacement down from that high and displacement up from that low. So it was a little bit confusing. We also noted in the morning that we had accumulation for the AM session and we started pumping up. We wanted to be careful with the fact that maybe it's pumping up to take out this buy side level right here and then distributing back down. So all morning we were looking for shorts, trying to see if there was any kind of price action that was going to solidify the fact that we wanted to see shorts. So upon market open, we ended up having accumulation between 9 to 923, which is Q1. And so if we were going to end up getting shorts, I wanted us to manipulate up into this buy side level, hitting this fair value gap. So we did not get that. The manipulation was actually down into sell side liquidity and also that 1-hour fair value gap. So that was really interesting. So when we saw that, we decided we were going to take longs, and we wanted to take longs at the inverse of this fair value gap right here. As you can see, we did not get that price action. We did not come back down here. We actually ended up getting a change of state of delivery right here where price tapped us back in. So one good trade that we missed was this drop into that change in state of delivery, also into this fair value gap right there, which we had marked out. And it could have ran all the way up, eventually hitting our price target right up here. And this was a very nice risk to reward. So we missed that. Now, what happens after you miss that initial trade? You can either do one of two things. You can walk away, and then number two, you can see where the draw on liquidity is going to be. What is the target? I noted this draw on liquidity right here, which was this high right here. We wanted to tackle that high, and that was going to be my target, especially because I believe we had a higher time frame PD array somewhere above here where we could have rejected off of. So that was my main goal. And when we saw that we had this 5-minute fair value gap right there that I marked out, let me go back to that. I was telling the team that I want to see, once price comes back into this 5-minute fair value gap, if we're going to end up displacing through it, then we're most certainly going to come back down, because then this was just accumulation, manipulation, and then we were going to distribute back down. If this 5-minute fair value gap held us up, which it seemed like price wanted to continue higher because, number one, we never got an invalidation of this short. Number two, we ended up getting a market structure shift. Number three, bullish PD arrays are holding us up. Okay? All those things just completely defeated our narrative of it coming back down. We saw that price wanted to head back on up. So we were looking to get into the long trade here. And I wanted to see, when we dipped back into here, I wanted to see a bearish PD array get invalidated, and then we would end up taking it long from there. So we did see that. We ended up taking that first long with a stop right at that swing low. Here you can see price retracing back into here. So we have a narrative of a long bias on the higher time frame. We bounced off of a 1 hour fair value gap. We ended up getting a market structure shift on lower time frames, and we're dipping into a 5-minute fair value gap. So we want to see a market structure forming that would give us the same kind of market structure on the higher time frame. And we got that here with that 1 minute fair value gap getting inversed. We got a tap right into that. Our stop was below this low. If we were going to end up continuing higher, I did not want to see displacement through this. Now, as you can see, it was very frustrating because we ended up getting stopped out right at that tick level. Unfortunate. But we saw that we ended up getting some more movement back up. Now, this secondary trade that I took, the reason why I took it, it was already 10, almost 11 o'clock in the afternoon, or in the morning, sorry. And we were just not coming back down. By 11 o'clock, we typically know what direction price is going to go in, and especially if the draw on liquidity had not been hit yet. And so because of that, based off of what happened here, I decided that if we ended up getting a 1 minute candle close, oops, what did I do? If we ended up getting a 1 minute candle close above this bearish fair value gap that we had formed, then I was just going to market order in with a stop below this low, which should be a protected low at this point because it took out the liquidity here and targeting that high. And it was very quick for us to get up there. It was in a matter of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, about 15 minutes or so, 15, 16 minutes. And we ended up getting that trade. Very nice, very easy. So there were 3 possible trades, right? The change in state of delivery, which is what my usual model is. But I didn't think of it because I haven't been using it lately. I've been using inverted fair value gaps mostly, but this could have paid out too. Entering on this fair value gap would have been nice too. I didn't like the risk to reward because I was aiming for this buy side level because initially my narrative was short. I wanted to hit here first and then we would drop. Sorry. So it would not have worked out in terms of a risk to reward. So you could have taken this one. This trade did not work out. This trade worked out. I mean, it could have worked out here maybe if you took, a partial right up here, but that is such low risk to reward. But if you did that, stops to break even, then you would have gotten stopped out, waited for the next one, and you would have banked. But regardless, if you took this one and lost, if you take the same kind of risk, although the stop losses are different, say you risk 250 each trade, here you lost 250, here you made 500, you would have walked away $250 in profit. Pretty simple. That's why risk management is very important. And also patience. Today was a day worth of patience because, we waited until, 10:25 to get into that trade. Got stopped out about 30 minutes later, only to get back in again and then get the full extension that we wanted. But regardless, good executions. This one was a little bit unfortunate. We ended up becoming liquidity here. Really, the stop should have been probably the bottom of that fair value gap, but then again, the risk to reward was just not there. So it's okay. It happens. This is very rare for me to have to be stopped out like that. But it can happen. But if your risk to reward, like I said, is good, then it should not be affecting your P&L. So this one was a rather long video. Thank you for sticking it out all the way through. If you did, like always, if you guys have any questions, please hit me up in the comment sections below. If you have me on TikTok, Instagram, and even Discord, shoot my DMs. I'm always available for any kind of help that you may need. But yeah, hopefully these trade recaps are helping you out. And we will catch you guys all tomorrow. Peace.
Espero que el público sabe que esto es una cosa más o menos informal.
Soy yo.